Weaker companies are piling on the debt, and that could be trouble if things get worse. Breaking news. Low-rated companies are the biggest accumulators of debt, prompting a major credit agency to warn of significant troubles ahead if current conditions deteriorate. The alert from Moody's Investors Services comes as short-term bonds. Should conditions continue to deteriorate, it could mean trouble for companies that are rated at the lowest end of the investment-grade debt spectrum, a group that rang up $695 billion in new debt during 2018. The danger is that, while new issuers in B3 debt comprised 44% of all new paper that came to maker in 2018, double the level in 2007, just before the last recession that saw massive debt defaults when the subprime mortgage market collapsed. As things stand, the debt markets still offer enough liquidity and company earnings are still strong though diminishing. The level of CO, however. Much of the B3 rated space consists of companies owned by private equity firms, which are often inclined to use debt to fund operations and growth and have what Paget described as aggressive. However, there are some signs that the group is taking preventive measures against the downturn. The lower rung of the high-grade universe is in. While improvements in the sector, he said, could help offset some erosion in the high-grade space.
Raindrop, drop top, smoking, no cooking the hot pot. Fucking on your bitch, yeah, that. Looking up.